Yeah, it looks fairly strong. I think once we start digging into it, I mean, the first thing that I see is, equities trading a sizable beat, fixed income trading looks like a pretty sizable miss, actually outweighing the beat in equities. And I think, the main focus heading into the first quarter results was going to be how did the capital markets business perform?
Yeah.
Particularly for Goldman and Morgan Stanley. These are the large businesses in these franchises that drive drive the units. And so when you look at Goldman Sachs, about half of revenue comes from trading. What we saw in the first quarter was a pretty active market, right? Particularly on the equities side. So the broad expectation heading into results was pretty robust for the trading side of the business. And what we're seeing now is, maybe a little bit of a confluence here where we have equities beating those expectations, fixed income a little bit lighter. On the fee side of the business, it looks like we had broad beats across M&A, ECM, and debt underwriting.
I got to interrupt.
Yep.
Here's the headline I've been looking for, folks, and our team does a great job. Return on average shareholders' equity, 19.8%. Are they basically, and this is to begin the earnings season, and we're hugely advantaged to have Neil Sipes' leadership here. Basically, these firms are trying to hide how much money they're making. They really don't want whoever. 19.8% ROE, that's stunning.
Yeah. And
that's not in my textbook.
And when you look at these businesses, particularly on the fee side, things like that can generate pretty robust returns, especially you think about Goldman's strategy or returning to the core of the capital markets while simultaneously building out the even higher ROE business in terms of asset and wealth management. So when you have, I know markets are in flux right now, but when you take a step back, we're still only just a handful of percent off of all-time highs. And that's really a support to those asset and wealth businesses that are, helping prop up that 19% ROE that you noted. And so I think as we really move into big bank earnings throughout the week and we get onto the earnings call today for Goldman, I think the main investor focus is going to be what happened with clients at the end of the first quarter and how has that trended in the first 2 weeks of April, because that's really what's going to inform the outlook as we sort of work through these numbers that I think we see some puts and takes here where there was a high bar there for trading revenue. It looks like we might have come a little bit lighter on that, but on the investment banking fee side, it looks like the beat. But
I'm confused. Trading of equities and bonds and currencies, commodities, or trading of bungalows out in the Hamptons? Which is it?
Trading of equities, currencies, commodities, et cetera, right? And so that was, again, I think, where we had a high bar heading into the quarter. The fees, of course, look pretty strong for the first quarter, but when you bring all this volatility and uncertainty into the equation related to war, related to AI, related to software, et cetera, you start to question what was expectations for a really strong 2026. Looks like first quarter is going to hold up. But what has happened in April?
Alexis, jump in here, please.
Well, I'm looking at Goldman's stock right now, down 1 1/3%. So no. I guess even the show-stopping $5.6 billion net earnings figure, not enough to get, I guess, investors excited about the stock here in the early going.
Yeah, and I think that goes back to sort of what we're talking about here is we expected a pretty strong quarter for capital markets across trading and investment banking. And so I think when you have that high bar, the expectation is to meet or beat, right? Especially when you think about some of the guidance that we got from peers like JP Morgan talking about mid-teens growth in the trading business, particularly late quarter volatility fueled by the war. Where are we there? And
did you see the steam come out of my ear? I almost scorched Alexis over here. Neil Sipes with us brilliant on the earnings as we dive into the banking season. We're going to have him on a lot here, we hope, in the next couple days. Neil, peers, but they're all different, aren't they? Describe how JP Morgan is the Park Avenue juggernaut is different from Fortress Solomon. How are those two businesses different?
Yeah, and so when we look at Goldman, it's heavy focus on the capital market side, building out the asset.
I'm not getting a Christmas Club account with Goldman, right?
That's right. And so when you pivot to JP Morgan and Bank of America and the like, you're getting a much better gauge on the broader U.S. economy, how the consumer's doing. And I think that's going to be a big focus there as well. Of course, we know JP Morgan's a leader in the capital markets space, but when you look at the franchise as a whole, there's much larger drivers there. And so those will be in focus.
Nicely said. Last 10 years, Alexis, it's been difficult. I mean, we go Apple, Microsoft, whatever, NVIDIA, 20.4% per year total return, Goldman Sachs, over the last 10 years. Srinatarajan was telling me Mr. Solomon was really challenged here a number of years ago. He's turned that puppy around like nobody, right?
Yeah. And so I think, as we mentioned earlier, it's the return to that core, right? What you think of when you
They
think
got
of
rid of
Goldman
Utah.
Sachs. Yeah, and you think about the consumer franchise, that sort of foray into the consumer franchise. Most of that has been winded down after a series of losses there. And I think what you see is Goldman Sachs not necessarily trying to press into those businesses that JP Morgan might have leadership in, or Bank of America, rather focusing on deploying the capital into those businesses, particularly asset and wealth management that you talked about, those high ROE businesses. I think that's where we see Goldman heading in the future.
Can you come back? Is it Tuesday? They're off tomorrow, right? Are there bank earnings tomorrow side?
No, there are. The JP Morgan and Wells Fargo tomorrow.
That's tomorrow.
And Citi as well, yeah.
Okay, can you come back?
We'll be here all week.
This is great. My deepest sympathies.
And you know what? I want to know what bank's going to talk about private credit, because I don't see it yet in the Goldman
Nicely said. Nicely said.
info. But we'll see.
I think we'll get some questions on that.
I think we will.
You know you'll get some questions.
I'm curious what the answer shall be, but yes.
Are you on the? Do you ask questions on the conference call?
I won't be on this call this quarter.
Okay, we have someone else.
But maybe we'll funnel in a question if we can.